So everyone, I'm truly excited to have Tyler Williams here with us today. When we were preparing for the Spark this year, we wanted to make sure that we are able to get you the insights of really what's going on the U.S. policy side. Tyler Williams currently serves as the Treasury Department as Counselor to the Secretary on Digital Assets and Blockchain Technology Policy. In this capacity, Tyler works basically on all the digital asset-related activities, including stablecoins, custody, reserves, and DeFi. He previously served as the Galaxy Digital Global Head of Policy, clearly been on the commercial side of our space in one of the most prestigious firms, and he also served during the first term Trump administration as the Deputy Assistant Secretary to Treasury. Tyler, we're excited to have you here with us today, and thank you so much for joining us for this fireside chat.
Thanks so much for having me. I'm bummed to not be there in person, but it's good to be with you regardless.
So maybe we can basically kind of jump into the topics that we wanted to cover. We are now 8 months, almost 9 months into the new administration, and we really seeing unprecedented coordination between Treasury, the Fed, the OCC, and other agencies that are working on digital assets. Can you walk us through on how the various departments are actually working together, how this coordination works from a day-to-day standpoint, and where do you see the most productive collaboration happening today?
Sure, glad to. Well, maybe I'll just sort of level set for the audience how I think about sort of the policy apparatus in the United States. I've always sort of thought about the progressive activity to provide regulatory clarity in the United States as sort of a three-legged stool. We came into the beginning of the administration with sort of goals of getting durable legislation in both dollar-backed stablecoins and also market structure. And then very early on in the administration, the president issued an executive order establishing the Presidential Working Group on Digital Assets, which is chaired by David Sachs. And that group that exists at the White House sort of serves as the nucleus for the administration's policy efforts. And it has participants from the administration, from Treasury Department to the Commerce Department to Department of Justice, and then the market regulators in the United States being the SEC and CFTC. And that tasked that working group with really writing a comprehensive report and framework with regard to what we want to accomplish from an administration perspective in digital asset policy. We produced that report at the end of July. And in that report really is the framework and the roadmap for what we're going to work to accomplish. It has 111, I think, different recommendations are right around there. And so I would say that is what our that is the sort of roadmap for what we want to accomplish on digital asset policy. And that's one leg of the stool. And then the other two legs of the stool are the market structure legislation and the stablecoin legislation. And we have the stablecoin legislation signed into law. So we're really actively working to get the other big milestone advanced in Congress today.
So, let's talk about the second or third leg of the stool with the Genius Act, right? So now that the Genius Act was made official and become a law, we've seen Treasury being increasingly vocal about the stablecoin potential to really strengthen dollar dominance globally. And basically, there is this term right now, dollarization through crypto. What's your views on this trend, and I think how Treasury and generally speaking, the administration sees this opportunity for the United States?
Yeah, absolutely. So I think just to level set a little bit, we had a pretty vibrant stablecoin ecosystem that existed prior to the enactment of the Genius Act. And really in the United States, that that framework was built and supported by the activity that had occurred on a state level. So the stablecoin issuers that existed today had operated through regulatory licenses and supervision at the state level. What the Genius Act really did was to provide a durable federal framework that also recognized the good work and the support that the states have in the U.S. economy. So now we have a regulatory system in the United States that exists in law at both a state and federal level, much like we have a state and federal regulatory system for banking in the United States. And we're actively at work to implement the Genius Act, and as are the rest of the federal regulators that are delegated responsibility under the act. So really, when we talk about what the Genius Act will do or what it potentially do, you can look to some of the private sector expectations for growth of stablecoin market. We have a market that sits around 250 plus billion right now. When you have a federal wrapper that sits around the ecosystem, many private sector expectations are that is going to drastically increase by the end of the decade. And I think when you talk about stablecoins, what we're talking about is putting fully collateralized dollar instruments in the internet. So it's programmable forms of money that live on the internet, and it's a unique source of demand for US Treasuries. We expect stablecoin issuers will be buying treasuries. So that's one side of the equation. And then because of the speed and the efficiency that stablecoins promote, you can have the expression of those stablecoins proliferated in a much different way than we have today. So that's what people are talking about in terms of the dollarization. You have the speed and the efficiency and the projection of the US dollar, and it's another form of US expression globally.
So I think we were arguing in the last couple of years that really the opportunity is for US dollar-based stablecoins is not only the fact that people want US dollars as a quality instrument, right, from the quality of the asset, but actually the fact that if we are able to enhance it with the technological capabilities, that will basically create kind of a preferential payment methods, right, that we think that people globally will want access to. This is kind of also the same way that you guys are looking at it, right?
Yeah, exactly. I mean, if you look at the current market today, the vast majority of the stable coins that in existence today are dollar denominated. And having one of the first comprehensive frameworks that exists globally is really important, and it's really important for rejuvenating the industry's existence in the United States.
And then maybe kind of looking broader and kind of switching gears into other asset classes that can be tokenized or already tokenized. There's been a lot of talk about streamlining the regulatory approach, and I think that from Treasury's perspective, how realistic it is that we will basically move into a more unified or harmonized framework from the patchwork of, I would say, federal and state rules that we have at the moment with regards to digital assets in the United States. And what other measures you think that we can see from Treasury that helping to advance the innovation within the scope of the current administration?
Yeah, well, I think there's quite a bit of activity that has occurred. So I'd like to just sort of recognize where we are. Congress has been debating for some protracted period of time what to do on stablecoin regulation, stablecoin policy. Like, we very quickly were able to advance and enact a major milestone piece of legislation that provided certainty at a state and federal level for dollar-backed stablecoins. I think success would be, can we achieve the same with the market structure side of things? There's been quite a bit of consternation in the industry and in the regulatory construct around what digital assets are or are not securities, and exactly how to provide the clear rules of the road for the spot regulation of the marketplace. And I think what we need to do and what we are actively working on is in the US, we have a dual system of regulation in many products and in many environments, both at a state and federal level. So success to me is achieving the optimal regulatory construct where we can recognize that states are often important sources of innovation from a regulatory perspective, and then also provide that clear market certainty and international regulatory certainty from the federal level. So success is getting both the state and federal legislative environment for stablecoins and market structure enacted, and then we'll work actively with states and international counterparts to make sure that is the most vibrant as possible. So I don't know if I would couch it as like a unified framework. I think some type of healthy competition is really important. But I would say we're ahead of schedule and we have work to do, and we'll keep working hard on that.
Yeah, I would definitely agree that the pace in which you guys are able to push the changes through is actually very encouraging for all the participants in the ecosystem. And do you think, what's your view on that front with regards to the international alignment, right? Do you guys see any inbounds or discussions that are happening right now with your international counterparts from G20, various G20 countries? Because some of the questions that people tend to have is, would we ever see some level of harmonization globally, or this is actually outside of the scope of the efforts that you guys are currently leading and you're mostly focusing on stabilizing things in the US?
Yeah, I think there's a great deal of international conversation that is occurring around digital asset regulation. And one of the important functions that the Treasury Department has is it serves as the finance ministry. So I actively work with my international affairs colleagues at the department and their engagements with other foreign sovereigns and other regulatory regimes around the world. And they do that in a variety of different capacities. And I would say the interest and the work that is happening on an international scale is quite robust. And just as an example, one of the pieces of the Genius Act that was in the law was it gave the Treasury Department and others in the US federal regulatory ecosystem the capability of entering into bilateral agreements on stablecoins. So I think because that has been put into the law, there's even more interest in finding ways to work on a bilateral level with the department.
So kind of changing slightly on the topic, one of the most difficult areas for regulators to try to understand is really DeFi, right? Because I think that when we are talking about crypto within the CeFi, the centralized ecosystem, a lot of the constructs, right, that we have in traditional finance can still be applied by. But DeFi is clearly a fairly different beast in terms of how it should be regulated, what are the different liabilities on the different platforms, and I think that there is almost a theoretical argument across many of those legal, regulatory, compliance questions. In the under the previous CFTC. I was fortunate enough to be on the tech advisory committee, and I think that we've spent months in terms of trying to figure out how they should be looking at DeFi, which eventually created a report that they socialized. But I think Treasury is also is important for the oversight of the various AML frameworks, right, in the United States. So how do you view DeFi, AML liabilities in the context of all the decentralized protocols, and how do you, and probably like the most challenging question, how do you guys thinking about striking the balance between consumer protections and making sure that there is no illicit activity with still allowing some level of innovation in a domain that is rapidly expanding from a technological capabilities?
Yeah. Well, let me try to unpack a little bit of that. It's a deep and complicated question. And as you might imagine, when we were writing this comprehensive report that I referenced earlier, we spent a great deal of time thinking about DeFi and the growth in the ecosystem and what the appropriate sort of levels of federal government interaction are or should be. And I think what we have sort of rested upon or come to a conclusion on is that, Congress, when they're thinking about enacting durable legislation for market structure, they should keep a couple core considerations in mind as principles. And I think if you look at the contents of the House passed legislation, and then if you also look at the contents of the most recently released Senate Banking Committee draft on market structure, these principles are really surrounding around, ensuring that legislation accounts for individuals' ability to custody their own digital assets without a financial intermediary, and that they can engage in lawful peer-to-peer transactions using those assets. That was also in the president's executive order that he issued early on in the administration. And I think one of the other major pieces that's within these legislative vehicles, which we also touched upon in the report, is Congress should codify principles regarding how control over an asset impacts the Bank Secrecy Act obligations, particularly for money transmission. So a software provider that doesn't maintain total independent control over the value should not be considered as engaged in money transmission for the purposes of the BSA. And I think that's like really, really important, and that has presented a number of challenges to builders and developers in the ecosystem, and has also presented challenges internationally as well. So I think that's a really important piece within the U.S. Legal framework. And then I think lastly, there's been activity from the Financial Crimes Enforcement Network, or FinCEN, as people know it by, which is a piece of the terrorism and financial intelligence vertical at Treasury. And we should basically get to a point where we're evaluating whether or not the existing guidance related to the digital asset sector that's really stems from 2013 and 2019, whether or not it should be modified or updated, particularly in the context of the market structure legislation that's happening. And we've done a great deal of industry engagement on this accord, and we've heard quite a bit of enthusiasm around that. So I think it's something that we'll continue to look at from the Treasury Department.
And how do you guys would want to see the industry being able to participating in evaluating and suggesting various enhancements to that? Because I assume that, we all believe that the approach that is taking over here to minimize or basically to view developers that are just developing DeFi infrastructure where they are essentially have no control over the protocols themselves after they are being deployed as being outside of money transmission. I assume that you guys would still like to see certain parts where there is abilities to enforce, right, some of the controls that we need to prevent illicit activity. So where, from your guys' perspective, the industry can be helpful, and I think what are you guys expecting people to think through?
Well, I mean, I think the best policy engagement on matters, particularly that are like very technical in nature, is like you have to engage with regulatory bodies. So I think something that we've done a particularly good job of is being open and accessible to the public when projects and developers want to talk about unique issues. Now, I think that for there to be sort of legal certainty, the best path is Congress working on this sort of control matter within the MSB regulatory framework. So I think in the absence of that happening, I think we really need to see more industry engagement with us so we can find the way of providing the certainty that the industry is looking for.
This is somewhat outside of the responsibility the area where Treasury has direct oversight, but there is a bipartisan support for RWAs, for tokenized securities, and I think there is a strong view that this is the future and where there will be a very strong interest from traditional financial institutions. So with whatever you can share from the working groups and from the report, how you guys thinking about the SEC evolving the framework, and what really needs to happen in order for this market to scale? Because while we already have quite a few innovative projects or innovative products on the market, including money market funds and tokenized equities that were launched in the last 24 months. What really needs to happen for this to scale into the trillions of dollars of this asset class?
Sure. Well, thanks for the question. It's you're right, and it's slightly outside of the primary remit of the Treasury Department. Obviously, we have the two primary market regulators in the United States being the SEC and the CFTC, and I know the audience understands this, but tokenization, to me, it just refers to the practice of using blockchain technology to record ownership of an asset. So in the United States, having a very clear legal understanding of whether or not the assets are securities or they're non-security assets becomes really important to the growth of this space. And I think that when we're talking about this, the regulation that follows sort of follows the assets classification. So having Congress enact durable legislation that very clearly articulates what's a security and what's not becomes really important to the growth of the tokenization of real world assets. You're right to say that within the report writing process, because the SEC and the CFTC are a part of the President's Digital Asset Working Group, we talked quite a bit about this, and we put a bunch of recommendations in the report of things that they should look at. I'll just name a couple. We said that the SEC should consider amendments to Reg NMS to better accommodate tokenization of national market system securities. The CFTC has noted the potential for tokenization to improve collateral market with atomic settlement and to improve liquidity needs in bilateral and multilateral clearing. So there's a great deal of efficiencies that we can find from the process of tokenization. You can have improved programmability. You can have better peer-to-peer transfer of assets with 24/7 functionality and simplified record keeping, all of these things for increased transparency. But I think as I think about what's sort of the next step, having that clear legal certainty of the asset classification becomes pretty foundational.
Yeah, we definitely agree, and we think that this is going to be the next major wave, especially now that we've cleared the way through having basically the payment functionality on chain through the Genius Act. Now, an area that clearly we spend a lot of time on, and I know that Treasury as well, is really what the bad guys are doing in this space, and the most active group for the last 8-9 years, right? That was stealing a lot of the crypto assets that were gone, and essentially bankrolling their economy, right? Is their sanction economy is North Korea. So with whatever you can say, how do you guys viewing this threat that we just personally believe, and statistically there are all the evidence, right, that this is probably the biggest issue for the space. How do you guys view this threat? How do you think people should be thinking about building resiliency against this threat, and what does it mean, for the way that people who are looking to really build businesses and operationalize businesses from a digital asset strategy?
Sure. Well, it's an extremely tough question to answer, because I don't think it's one unique thing that's going to be the sort of silver bullet to counter sort of the threat that North Korea presents and some of the other threat actors present. But maybe I'll just point out sort of a handful of things that we're thinking about that we also included in the report as things that we should work on. And maybe I'll start with the Genius Act, because the Genius Act did require us, which we have done, is issuing an RFI to gather information on innovative tools to detect illicit activity, including with respect to digital identity verification. So that's out there. We have spent some time working with our colleagues at NIST as part of Commerce on customer identification protocols and other matters. So I think, those are two things. We're extremely supportive of increasing public-private cooperation, and we can look at better information sharing through FinCEN programs and other law enforcement programs. We need to take a sort of multi-factor approach to interdicting these cyber threat actors. And I think one of the things that we talked about in the report is, can we use the enforcement requirements of multi-factor authentication? Is that a part of the interception techniques, or can we get organizations better equipped to be using some of these MFA capabilities so that we can work to reduce the risk of theft? And we also talked about agencies developing principle-based requirements and standards for digital asset firms, and those principle-based requirements and standards need to take into account various activities and industry participants, so that we're able to strengthen the protection from illicit cyber actors. One other piece is the Treasury Department. We have an Office of Critical Infrastructure and Protection. I think that that group in particular could work with industry to identify opportunities to increase information sharing on cyber risks, and also providing US regulated digital asset firms with access to the automated threat information feed. I think that can be really important to identifying gaps and addressing operational resiliency for digital asset firms. So I think when we look at this issue, we need to think sort of holistically about all of the tools in the toolkit that we can leverage.
Yeah, definitely agree on the last part. I mean, we've been investing in the last 2 years in the crypto ISAC consortium, right? That is designed to share information, share threat intelligence across the space. I think we are starting to see some outcomes from that in terms of increasing resiliency. But maybe to go back to something that you mentioned. So from Treasury perspective, it sounds like, that even without going to the critical infrastructure side, what operational controls do you think that will become base requirements for people that are obtaining license or holding digital assets from an institutional standpoint? How are you guys thinking about or how the regulators in the US are thinking about the baseline operational requirements for things like custody, AML, compliance, and others? And what should the institutional firms that are here at the audience, what they should be looking at and what they should be preparing towards?
Yeah. Well, I guess as I think about it, in terms of operational controls, I think we think about sort of like the safeguards that you typically like to see institutions have, such as asset segregation, appropriate disclosures, principles-based cyber standards, whether or not they're bankruptcy remote, do you have clear separation of legal entities, capital requirements, liquidity and redemption, all those sort of things from like a supervisory lens. But I think more acutely, when you think about what firms can do, you could implement policies and procedures to protect confidentiality and to integrity, information sharing systems, like all of those things from like data controls and identity management to systems and network monitoring. These are things from an operational level that you could do. And it's a long list of things that I think firms should work to implement and that regulators can encourage. But the use of tools to simulate and validate transactions prior to signing, to confirm the intent of the transactions matches the outcome. But all of these things become really crucial. The use of identity tools to protect private keys and digital accounts. There's a long laundry list, and just as well as anyone how robust you need to think about all of these sort of operational resiliency and controls. So I think it's sort of two-pronged. The industry is always sort of at the tip of the spear to identifying these types of threats and putting in policies and procedures that can provide that layer of defense, and then ensuring that industry is communicating with their primary regulators and the Treasury Department to inform lessons learned. I think all of those things become really important for providing the right type of like policy and supervision and regulation. So it's sort of a two-legged stool, I would say, or a bilateral relationship between the regulated and the regulators.
Yeah, appreciate it. I think we totally agree that so far there is no silver bullet, right, to try and address all those issues, but definitely regulatory clarity and the ability of regulators to step in and at least set baseline standards, it will be really welcomed, and I think will add a significant resiliency. And we've been quite fortunate to be able to contribute some of our knowledge and data to the efforts that you guys are taking. And with that, I guess we are sort of approaching time. So maybe your last comments on where you see kind of the next couple of months, and maybe like final words on what you think that the industry should be thinking of.
Well, I think everyone's come back in September, rested from the August recess in Washington. And for those who don't know, in August, Congress takes a break. It goes back to their respective districts and respective states to do district work. There, I think, is going to be a real effort in September and October to advance the market structure legislation. So we have a busy few months ahead of us working on congressional legislation. I would encourage everyone to take a look at the report that we issued in the end of July. There's over 100 different recommendations that we made. Those are all of the things that we're going to be working to implement and execute against. And then obviously we have the Genius Act that's been signed into law. So we have our hands full over here, but I would encourage everyone, to the extent that they want to come talk to us about any specific issue. We have an open door policy, so we'll continue the work, and we look forward to engaging with folks as we go forward.
Thank you so much for doing this. Thank you for all the hard work that you guys are putting into create a completely new climate for all of us to operate, and to really allowing the advancements in this space. And I think we all feel very encouraged to be able to invest in the US market right now, that we think that is now really leading the innovation globally with regards to digital assets, and to just create a huge optimism about this technology and what it can bring to financial markets, to basically be able to rebuild our financial markets on chain, with hopefully us leading it from the US and to create a global impact. So thanks again for joining us.
Thanks for having me. I hope everyone enjoys the rest of the conference.